Hey everyone, welcome back to Corporate Decoder, the place where we crack the code of corporate filings. Today we are looking at a fund claiming to invest smartly in different sectors of the economy, but we will see that, like always, the devil is in the details. This time we're diving into the DWS Equity Sector Strategy Fund's semi-annual report. Is this fund really picking the best sectors, or is it just another Wall Street story? We will check their key numbers to see what is really going on. If you are interested in corporate filings and want to discuss them with like-minded individuals, please remember to join our Discord channel. This report covers the 6 months from September 1, 2024 to February 28, 2025. It's basically a checkup on how the fund is doing, what it's investing in, and what it costs you to be a part of it. There are a few different classes of this fund, such as Class A, Class C, Institutional Class, and Class S. Each class has its own quirks, especially when it comes to fees. Let's zoom in on those costs, because that's what really eats into your returns. If you had a hypothetical $10,000 invested in Class A, you would have paid about $38 in costs for those 6 months. Class C is way more expensive, costing $76 for the same investment. This difference is mainly due to how these classes charge fees, with Class C having higher ongoing expenses. Institutional Class and Class S are the cheapest, costing around $25. The expense ratio, which is the percentage of your investment that goes towards fund expenses, tells a similar story. For Class A, it is 0.74%, while for Class C, it skyrockets to 149%. Keep in mind these are annualized numbers, meaning that is what you pay for the whole year. The Institutional Class and Class S are at 0.0, important point to keep in mind, and is not mentioned enough as this could change at any time. Now, let's talk about what the fund actually holds. Total net assets are about $85.9 million. It is not that big of a fund, and the fund has investments in 292 companies. The portfolio turnover rate is 13%, which is pretty low. A low turnover rate means the fund isn't swapping out its investments very often, which can be a sign of a more long-term strategy. This can be good to minimize transaction costs. The total net advisory fees paid were around $55,407. Where is your money actually going? The fund mainly invests in common stocks 94. The rest is split between cash equivalents, 3 exchange traded funds, 3 at Mettes. Basically, almost all of the fund is in stocks, and you are paying them to choose what stocks, rather than you just buying an ETF. Now let's get into those specific sectors that this fund is supposedly so skilled at picking. A huge chunk of the fund's holdings is in information technology, 27%, followed by financials, 17%, healthcare, 15% communication services, 10%, ebinars and industrials, 8%. In other words, you're betting big on tech, banks, hospitals, media companies, and boring industrials. So within those sectors, where exactly is your money going? A good chunk of this fund's money is in Apple 6.4N and Microsoft 6.4N TAB and Microsoft 6.4ND. Amazon, Nvidia, and Alphabet are also up there. Then it becomes less significant. These top 10 holdings are 34.4% of the entire fund. That tells you these top picks really drive the performance of this fund. If they have a bad quarter, so does the fund. Let's dive into the actual holdings in the fund to see the financials are justified. The fund holds 5,139 shares of AT&T, valued at $140,860. It holds 395 shares of Electronic Arts, Inc., valued at $51,002. The fund holds 962 shares of Netflix at a value of almost $943,299. They are marked as non-income producing security. The fund holds 15,448 shares of Amazon, valued at almost $3,279,320. As of February 28, 2025, the fund had net assets worth almost $86 million. For the 6 months ended February 28, 2025, the fund's net investment income was $434,114. They had a net gain of almost $4,230 2040. Overall net assets decreased by over $2,800,000 due to fund transactions. Here are some of the financial highlights. For Class A shares, the net asset value beginning of period was 17.86 East, and the net asset value end of period was 18.67 Senchen. The total return was 550%. For the ratio of expenses before expense reductions, it was 1.02%, but then dropped to 0.74% after deductions. It appears that the funds lends its securities, and they are all required to put up collateral to borrow the fund's securities. But if those borrowers cannot return the funds, there might be some losses involved. One thing I noticed is that there was a special meeting of shareholders where they elected 6 board members. It is interesting to see the total number of votes to the board members. Here is the big one. The Advisory Agreement Board Considerations and Fee Evaluation. It seems the board renewed the DWS Equity Sector Strategy Fund's management with DIMA in September 2024. The board thinks DIMA provides portfolio management services and administrative services. They considered that the risks to DIMA in managing the fund and the senior management and investment personnel are good. The board is constantly looking over the fees charged by the fund and comparing them to the returns. The problem is, it seems that the fund has not been performing very well and has been underperforming. In fact, the board considered whether there are economies of scale, but it seems like the fund does not benefit from them. So what's the real story here? It looks like the DWS Equity Sector Strategy Fund is just another fund in the market that happens to be underperforming. While it claims expertise in sector selection, its holdings are largely concentrated in mega-cap tech stocks. The fees are not outrageous, but it does not make a whole lot of sense to pay someone to just pick established companies, rather than just holding a broad market ETF. Also, the big difference in costs between share classes should concern investors. Alright, that's our breakdown of DWS Equity Sector Strategy Fund. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.